A'udhu billahi minash shaitan rajim. Bismillahir Rahmanir Rahim. Greetings, traders. It is I, Abdul Shabazz, and this is some real change stock options trading journey. Thank you for joining us on this fabulous Friday, this best day of the week, Yaumu Jumu'ah. Grateful to be here with you guys. Grateful to be wrapping up another week. Well, let's get straight to it. The SPY has dropped and dropped again. Down $27 from yesterday's close. Currently down $13. Unbelievable. Brooke Sanchez is in the building. And if you don't mind, Brooks, posting those wonderful plans that you have. Dollar Bill is in the building. Shout out top of the morning to you. Dr. J is also in the building on this fabulous Friday, the best day of the week, and for some of us, the saddest day. Me personally, I don't like weekends. I love the market that much. Thank you, Brooks, for posting your plans. Brooks says he like a call above the 523.70. He has an alarm there. Okay. Getting in at the 524. And he likes put at the 515.9. He has an alarm there. Get in at the 515.6. Possibly take it down to the 509. Dollar Bill said he is not trading today. He made enough money pre-market. Congratulations and shout out to you, Dollar Bill. Those of us here, we still have plenty enough time within the allotted market hours to be able to determine the sentiment of the market and derive some profits, as the market never stops providing opportunities. As Brooks reminds us, the market is like life. It never stops providing opportunities. Just a little bit of patience is required. Market alluding to wanting to come on up a little bit this morning, as we have identified a controlled buying algo coming from pre-market. Once we hit that low of the 517, the market then restructured itself. Morning, Todd. The market then restructured itself and has been in a controlled buying algo coming into market open. And as always, we're going to take our time and allow the market to show us what it wants us to see. If anybody else has any plans that they would like to put up and share with the team, please feel free. Everything is expensive this morning, as to be expected. I don't know if you guys had a chance to look at the option prices. Everything is expensive this morning. It's also part of the benefit of waiting as well. Dollar bill, we're currently in an uptrend that began at 7:30 on the SPY, that is. We've also been able to identify this controlled buying, which could be used as liquidity to take the market even lower, but only time will tell. Still very early. Let me look. Still putting together my plans. Go from the Alrighty, my plans are as follows. I like a 526 call. Believe we could take that all the way to 529, possible 531. I also like a put, a 520 put. I like to get in around that 519.9 area. Okay, believe we can go down to 517, 5, even possibly 512. So I'm setting my alarms now. And I'm also going to pull up news for us. We just got to have it. In today's trading climate, you have to have the news so you're not the last to know about tweets. So let's see what's going on here today. And Jerome Powell is speaking today. But instead of speaking at 2 o'clock, he's actually speaking early today, guys. He's speaking at 11:25. And we will be broadcasting that as well. So we will have Powell up live. So we'll be able to catch that.
We're for the ones who pay attention to every little detail. The ones who fuss, tinker, and sweat the small stuff.
Yes, please, guys, hit the like button. We took off the buzzer effect, so it will not hurt you. I promise you, if you do hit the like button, it doesn't sting at all. Thank you, Brooks. Being patient this morning, want to make sure that this is not just a liquidity grab for a move higher, but want to make sure that this is actually a continuation to the downtrend. And there has been a lot of liquidity built here. A lot of liquidity built here with these bulls that if they have to start covering, we could definitely see further downside. Option prices are extremely expensive today. Extremely expensive. Market has now hit my area of interest, where it has my attention. I want to acknowledge this controlled selling algo that is here. Let's see what happens with it. Let's see what happens with it. I have not got in the trade yet, even though this is my area of interest, even though this is the area I called out this morning. Being a little more patient. Especially with the options prices being what they are this morning. It's ridiculous. Definitely taking advantage today. Beautiful opportunity, which is why I remained on the sidelines. There's that retracement that I wanted to see, which is why we acknowledge that the first 5 minutes are very volatile. The first 15 minutes can trick you. Give the market some time to set up. The only thing you're going to get in a hurry is trouble. Okay, we have over 6.5 hours to find one solid good trade, and you only need 5 minutes to make more money than the average person's weekly salary. 5 solid minutes on a clear, proven setup. We don't trade emotions here, we trade plans. And I want to thank you guys for hitting that like button. That shows your support for this channel, as well as hitting subscribe. And the chat is open, so feel free to say whatever you like. Again, wanted to leave that window open that this could be a possible liquidity grab. Why is that? Because we've already acknowledged that we're in, a very small controlled buying algo that was coming from pre-market. Well, we double topped at the 526 area, showing that there was additional resistance supported by these earlier bears as well. Well, in order to get the market higher, if new money is not going to come in on a Friday morning after this drop, the only way that can get it this high is to create some liquidation, get some bears in trouble, and cause them to cover, which would be a nice squeeze to take the market higher. So that was also another reason why I didn't want to get into a put right now. Not right now. I still want to give the market some more time because I still am looking at the most recent, largest dominant algo that was presenting itself, and that was this controlled buying algo. So this little quick drop to the downside It's a liquidity builder and a setup for eager, inexperienced bears who could possibly get squeezed. Now, this is not calling for the reversal, but it's still saying that this definitely wasn't the time to take a short. Not right now. Definitely not the time for a put. Not right now. And again, that's my opinion. If you see something else, feel free to put it in the chat. If you see it a little different, feel free to put it in the chat. Now let's look and see what the rest of the charts are displaying. The 5-minute chart also supports that statement, as the 5-minute chart is now breaking out of that controlled selling algo, and as we speak right now is engulfing the most recent bearish candle, causing them to cover, putting in a bear squeeze, taking the market back up to its first natural resistance, which is VWAP. These bears are still, however, holding on the 935 bears. How long will they hold on? Well, it don't know. But there is still quite a bit of time left on this 5-minute candle. If the market price should blow through VWAP, that would then put a little pressure on the 935 bears. The 940 bears have already been smoked. They've either had to average down or they just completely have gotten out of their positions. Again, we are still out of this controlled selling algo, and the opportunity to be used as liquidity is still at hand. Brooke says the perfect opportunity to keep your hands warm. Andre is in the building. Shout out to you, Andre. Thank you for being here. Still a minute and a half left on this current 5-minute candle. This is one of those examples that I was saying how a 5-minute candle can dramatically change your bank account if you know what you're looking at, as the stock went from 520 to 523 in this one 5-minute candle with a natural VWAP retest. Nothing unusual about that.
This message is brought to you by Apple Card. Apply for Apple Card in the Wallet app and start using it right away with Apple Pay. Subject to credit approval. Apple Card issued by Goldman Sachs Bank USA, Salt Lake City branch. Terms and more at applecard.com.
A roach infestation can happen overnight. Combat roach kill.
Look how beautiful that algo lines up when I take pre-market off. I didn't change a thing. All I did was remove pre-market. Look how beautiful it lines up with the controlled buying algo that we talked about coming out of pre-market, okay, running into that controlled selling algo at market open. Very clear to see why, going back to my plans, I wanted to take a 520 put. I want to get in around that 519.9. I want to see what the action is here. So I will adjust that to the 519, okay, which should be my new entry that I want for that. Also, I will put a new alarm down here as well, just to alert me if the market does come back down here. Beautiful. There's nothing like being patient and waiting. Not only that, if the market does come back down, it will bring some liquidity with it in the form of these bears who are trying, these bulls who are trying to make this run. But they are definitely finding some heavy resistance naturally. Definitely finding some heavy resistance even in their attempt to get back over VWAP. However, you can see that I would not even like to entertain a call until or if we get above the 526, and I have an alarm there as well. I'd like us to clear this chop, which is exactly what it is. Clear this chop, choose a direction, and then let's get busy. Proof that this is chop, simply go to the daily chart. Pull up the daily chart and look at the size candle. What it is a doji candle. This is chop. It's been green, it's been red, it's been green, it is now and still red. Very small candle body. Still no decision has been made. So when you look at it this way, you see I want to take a call above the madness. I want to take a put below the madness. I don't care which way the madness goes. Just make up your mind. Wa alaikum assalam rahmatullah. Big brother Hamza is in the building. No job is too big or too small. He can do it all. All you got to do is just give Hamza a call. If you're in the 757 area, let me know. I'll hook you right up with him. Speaking of being hooked up, there are some people right now who are probably being hooked up to ventilators, respirators, looking at their account. There are people right now who are hooked up to hope. They've stopped trading and they started praying. All skill set have gone out the window and they don't know which way to go. Well, we like to welcome you to our channel. Come on in out of the cold. Get yourself out of the trap. And let us explain to you the benefit of learning technical analysis. Being able to read and understand what the charts is telling you. Knowing when to stand aside. Knowing when to participate. Knowing when. The difference between the two. Excuse me, guys. I have something bugging here in my house. It's probably one of my phones. I'll be right back. Alrighty then. As we get closer to the 10 o'clock hour, the market is still in a bit of chop. Those are my plans, which now turn into rules. If you have any that you would like to share, please feel free to put them in the chat. As we are marching our way to 1,000 subscribers. I want to thank you guys so much. For those of you who have recently hit the like button, I was just a little concerned when I saw the amount of viewers we had versus the amount of likes. I was hoping that no one sent any bots over here. I was looking like, man, what in the world? Who is in the group today? I had to pull out my extra eye here. Who is in the group today that's on here and doesn't want to hit the like button? Is it you? Interesting. Just know I got my eye on you. Yes, sir. And the market is now still choppy with a hint of bullish. But until I get these, let me see the lights go up. If not, I'm gonna take the algos off. Oh, no. There's still some people on here who's benefiting but don't want to show support. So let me go ahead and take these algos off the screen real quick and let you fly blind. Let me take these algos off, which is showing this bullish move. I was pointing out to you and let you fly blind till you hit the like button. You're not just going to come on here and benefit and not show support. No, sir. We'll show you right to the door. As the market has made that nice move to the upside now with a very nice bullish engulfing candle. Is it sustainable is the question. 1 minute, new 10 o'clock. 1 minute, new 10 o'clock candle is upon us.
I just ran into this guy at the gas station. You wouldn't believe what he said to me. He said, Pace, I've been following you for a couple of years, and I'm so excited to maybe do my first deal one day. I'm like, bro, you've been following me for a couple of years, and you still haven't done a real estate deal? Let's talk about this house, for example. 17742 West Via Hermosa Lane in Surprise, Arizona. This house, what's special about it is I had a real estate agent following me for 2 years. She joined a challenge that I was doing with my top performing students called the
10 o'clock candle is upon us. Still back into the heavy chop range. Still in that controlled buying algo. Haven't left it. Still waiting for the 526 area or the 518 area before I get active. I do have a long-term portfolio that I have added to and put some money in. But as far as my day trading, I'm waiting for the 526 or the 518. Being able to identify and see what's going on helps keep us safe. We identified that controlled selling algo coming directly out of the gate. Put in a low of 519 here since market open. And after that, we have been slowly stepping up, putting in higher highs, higher lows, higher highs, higher lows. Was able to identify this controlled buying algo that we are in right now. As the market now comes back and tests VWAP for support. As it will test it for resistance, it would also test VWAP for support as well. For those of you who are joining us, the top right is the daily candle. The bottom right is the weekly candle. Massive red weekly candle. In the middle is the 30-minute chart. To the left is the 15-minute chart. Above that, the 2-minute Heikin-Ashi. And in the middle is the 5-minute chart. There's a much benefit to be able to look at the same instrument from a different view to get a different perspective. And whenever you can get two or more to coincide with what you believe will take place, there's just a higher probability of the trade working for you.
Why did Amazon send me $20,000? Because I use Amazon AI. I'm going to show you a way to potentially make
Yes, sir. Absolutely, Brooks. Want to wait for that retest. We know what's our area. There's no need to be in a hurry. These contracts are through the roof. Contracts are through the roof. That was the first profit taking area on that 520 put that I called out. First profit taking area being 517.5. That line just hit it. If it does continue to go lower, I do us going seeing it's going possibly to the 512. Still in that control selling algo. Will be a great opportunity to build some liquidity if the market wants to go lower. If the market wants to go lower, this would be a great place to start building some liquidity. Also be a great place for remaining bears to take some profit as well, as this was the first profit target area that I called out. I did get in a call here using the low of this 517.1 as my stop. Very small risk for a very potential great reward. If the remainder of bears decide that this would be a good area to take profits as well, I would join them in their profit taking. Not calling for a reversal, but a breather. As there are two areas on the chart, you will always find the market moving, and that is areas of fear and areas of greed. Profit taking and stop out areas. Because the risk to reward was very good in this area, I decided to take the trade. got stopped out on that as the market reversed on a beautiful green to red move on that 5-minute candle. But as I stated, the risk was absolutely worth the reward. Very small risk was at stake. Bigfoot Hunters of Pennsylvania. He said, that has been my nemesis, getting stopped out. I could definitely feel you on that, Bigfoot Hunter. Trying to make sure that our stop is at an area that we are wrong in the trade. Sometimes battles with us as far as what that amount might be. And so as Dollar Bill said, good time to reduce your contract size, especially if we need to give it a little bit more room. A lot of time we'll have a number in our head and say, I don't want to go past this amount of number, which is sufficient. But where that lines up on the chart allows us sometimes to be taken out. Not in the area that we're wrong, but just because we've reached the amount that we don't want to go over in that particular trade. So finding a happy medium between that is definitely challenging. What I've been working on is trying to reduce my size and widen my stop, especially when the market is so volatile and having such big moves. When one candle is moving $1, $2, $2.50. Yes, sir. Good morning and thank you for joining us, Bigfoot Hunters of Pennsylvania. Guys, let's give them a nice little welcome and thank you for spending your time here, because there are many places you could be, so we don't take your time for granted.
We serve over 2 million square miles coast to coast.
Yes, sir. Let me go ahead and adjust this algo, especially because we got our teammate Brooks in a put right now. Okay. Second profit target potentially presenting itself on that. For that put, we called out a 520 put, getting in at the 519. Taking that all the way to the 517.5. Once we got there, we did have a little pop up. Try to see how far we could go, but that was just a little breather to grab a little liquidity to go further down. Believe we could possibly get to the 512. What a ride that would be. 10:30, new 30-minute candle is upon us. A new 30-minute candle. Brooks said took some profits, left a straggler. Nice job, Brooks. Way to trade as a aspiring professional. Taking the profits as they present themselves to you. Knowing that being able to extract money from the market is a very difficult thing. And when you have successfully done that, give thanks, give praises, rejoice, fatten your pocket, and leave that runner. Allow it to run on if it may need to. Turning out to be another remarkable day today in the market as we are breaking and just retested the lows. Whoa! Whoa! Well, look at that. I salute you, Brooks. Thank you so much. Yes, sir. Humbled. Love what we do. To being able to show up and show you guys we can get our money out of the market. Use the market as our ATM. And I will definitely be applying that towards my lunch. As you know, Ramadan is over with, so I will be eating today. Yes, sir. Definitely will have to, and that's why we come to the market with a plan for both sides, to the calls and to the puts. One will cancel out the other. So definitely need a new set of plans for a call, as the market is still continuing to show some downside strength. Don't forget, we got Jerome Powell coming up, and we will be broadcasting that. Latest news, this is not a normal environment. U.S. stocks extend deep slide on trade war fears. This is not a normal environment, they said. But if you take the time to learn how to trade, any environment is a good environment, as long as the market is moving. That's all a trader cares about. Now, of course, there is a time where we've made so much money trading that we are going to have to invest our money in long-term positions. But we're still going to take our knowledge of trading along with us. When we see the charts showing that it's a good time to buy, we're going to buy. And when the charts are telling us it's a good time to get out, we're going to get out. We're not going to ride the inevitable roller coaster, because you have no idea. And we say that all the time here. No one knows what the market is going to do. If they say they know what the market is going to do, they are lying. So be patient. Let the market show you what it's going to do. Let the move happen, and then see if there's going to be a continuation from the move or a reversal from the move. Then get in your positions. It doesn't matter if it's long-term, short-term swing, intraday trade, or a scalp trade. You still have to have the same principles of guidance. To just blindly put your money in the market and walk away is not wise. It does require a little more time to learn the sentiments of these candles. But once you learn the sentiments of these candles, which is based on psychology, and even the programmers of the algos still have to program the algos to trade a certain way based upon a certain set of criteria. It is way more beneficial to know what's going on than to have to be told what's going on. It's way more beneficial for you to be able to pull up the chart yourself and see what the market is saying than to have to wait for someone to explain to you why your portfolio is dropping like pancakes. Why I believe that even today we could go to 512. Why I believe even today that we can start off at the 520 and go all the way to 517 and then possibly to 512. So if knowing that that's the case, there's no way I would be in a call right now. No way. Please educate yourself and those whom you love so you can get out of the trap. This is not a game. A lot of people refer to the market by saying this game. I love this game. That's the problem. This is not a game. This is nothing like a game. This is more like real life. There are people who have lost their lives behind the market. People who have walked out of windows behind the market. This is absolutely not a game. This is absolutely not a game. The pain ain't no game. That's right. Bigfoot said the pain ain't no game. This is not a game. This is a profession. One that takes skills and time to develop. Absolutely. You have to be serious. You just can't be involved. You have to be dedicated. Keen skills, that's right. And time to develop. So true. Still in that controlled selling algo. Volume is still holding up pretty good. There are a lot of people in attendance today. A lot of people attending the markets today. I did not bite this time. I bit last time. I did not bite this time, and that was still a little bit premature on my part. I should have let the candle close, which I didn't. If I would have let the candle close, I would have seen that we never broke outside of the controlled selling algo. And if I would have let the candle close, I would have seen that we didn't get the continuation that we were looking for as well. In trading options, you just don't want confirmation. You want continuation. As Dr. J says, you don't want to be the first person out of the plane. You want to be the third person out of the plane. Because that first person out of the plane, they might mess around and miss the mark. So take your time. Using that lesson, not making that same mistake again. Showing us the pattern of grabbing liquidity to take the market lower. In order to have a successful attempt at a call, we would want to see a close outside of the controlled selling algo and then a continuation candle, making the safety of the trade being in the following continuation candle there. That would be the safe call. Without that, there is no safe call.
At Amica Insurance, we know it's more than just a car or a house. It's the four wheels that get you where you're going, and the four walls that welcome you home. When you combine auto and home insurance with Amica, we'll help protect it all. And the more you cover, the more you can save. Amica, empathy is our best policy.
And for those of you who did not know, we will have Jerome Powell speaking today at 11:25. If we still even have some traders left. Yes, that's what we want to see. It breaking to new lows. That's what we want to see. The 5146 break. That was a solid move. Awesome trading, Brooks. Locking in profits. Let me go ahead and put an alarm down here at this 512. So we can dance the jig if we get down here. Let's put a ring. $5.13. Called out the 512. Let's go, baby. Let's go, baby. Brooks said he just locked in more profits. And there's a lot of time left on this 5-minute candle. We're down to the 7. Come on, level 2. Let's go. We see what the Bears doing. We stacking at the 8. We going lower. We stacking at the 6. We hit the 5. We stacking at this. Let's see if we can stack at the 5. How much time? Oh, it's a lot of time left. We're going to hit it in this candle. We're going to hit it in this candle. It's too much time left. It's too much time left. 2.5 minutes. We already hit the 512.2. And nothing is exact, guys. Remember I told you everything is probability and areas. You know, I don't claim to know anything. I don't call that stuff out. Everything is just probability and areas. But, well, what do you know? What do you know? We just hit it. That's all it is to it. Come on, man. Come on, man.
Just like that.
Just like that.
That's all there is to it.
Just like
A winner. Just like that. We'll be right back.
Man, guys, it's time to go enjoy the weekend.
That's all there is
Beautiful
to it.
trade called
That's
out
all there is to it.
from the 520 put all the way
Just like
to the
that. We'll be right back.
512. Wow, remarkable.
Bam.
In the words of Tyrese,
That's all there is
what
to it.
more do you want
That's
from
all
me?
there is to it. A winner. Just like that. We'll be right back. Our price
Oh,
is right.
man, grateful. 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 Grateful, grateful, grateful. Nice trading, Mr. Brooks Sanchez. And for anyone else who might have also been in on that call. Level 2 finished it off for us. We could see the Bears pushing, running, and stacking. Looking at the time, it was just too much time left in that 5-minute candle. I knew we were going to hit it in that candle. Not because I knew, because I don't know anything, but I saw what the market was showing and telling us. In full transparency, I don't have anything else underneath this line. There's nothing underneath. Well, I do got some in the 502, but okay, but yeah, but there's nothing underneath this. So I am looking for some sort of support to base itself here. Some sort of support, some sort of bounce to happen right now. Only for the reason of Bears taking profit. 509, but I'm so happy with what I got right now. Amazing. 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 And thank you for the super chat, Brooks. And anyone else who might have made an astronomical amount of money on that particular trade. We call the trades out every morning. We share our rules, our trading plans, and we ask you to share yours as well. And no one knows. No one has any idea because no one knows what the market is going to do. All our trading plans tell us is if the market does this, we'll do that. And if the market does that, we will do this. And that is all. It hit that 512 and kept on dropping. Go ahead, Brooks. It's on you now. I called it 512. Brooks called it 509. Let's go ahead and put an alarm there for you, teammate. She hit the 510. Yes, she did. She hit the 510, Brooks. Let's go ahead and get you an alarm there at the 509. Put it at the 509.5. That's close enough. Just a man. All before 11 o'clock, huh? Amazing. Yep, but I did expect some basing here. As I stated, if only just for profit-taking reasons from the bears. Enormous profits has been made, especially, I called out the 520. Some people got in as early as the 522, the 524 puts. Man, salute to you. I look to improve and get better. But definitely called out an opportunity for a breather here. Again, not calling for a reversal, but a very responsible breather. As the two locations where you can expect money to be moved and money to be made are profit-taking areas and areas of stops. Somebody hitting their stop, somebody taking some profit, the market is going to move. So if you missed out on that put, this could be a very great opportunity for you to snag a little bit of money back from this call just in this 5-minute candle alone. 2 minutes left in this 5-minute candle. 2 minutes left in this 5-minute candle. Well, guys, I want to thank you so much. Let me give a quick shout out to our sponsors. I will leave the chat up, but I will stop the live commentary as I really have nothing left to say. I like to stop where my knowledge stops. And I really have nothing else to say. The market has said it all. So I do want to give a quick run to our sponsors. Thank you so much for being a sponsor here. Fallopian tube formula system. You know, someone who wants to get pregnant, but they're having a hard time having a baby. Well, maybe we can help. We've helped hundreds of women get pregnant with our clinically proven natural system. FTF is a new approach to IVF. Head on over to ftfsystem.com and find out some more information. Again, that's ftfsystem.com. Paid pen. If you have some time and a pen, we can show you how to make some money once you have been verified. We can show you how to make up to $5 a letter or $50 an hour. All you have to do is go over to paidpen.com, watch this brief video to explain how it works. Again, that's paidpen.com. Shirts for traders. You're a trader, right? Then look like one. Some of the finest quality trading shirts on the market today. And so happy that we now finally have a shirt of our own that I am wearing today. And the shirt that I'm wearing is our Take Risk, Get Rich shirt. Some real change. Only $29 with fast delivery. If you like to support us that way, please feel free to do that as well. Head on over to shirtsfortraders.com. Again, that's shirtsfortraders.com. And my trading view algo, again, I had nothing underneath that area yesterday here. I will put in some new lines to adjust. Beautiful drop this morning to that 511 low, and then you can see we are having that natural bounce at that 512, which you can see on my other chart clearly, momentarily putting in a hammer. A lot of time left on the clock. 5 minutes actually on the remainder of this 30-minute candle. So it might be very interesting where the market goes from here, knowing that very shortly Jerome Powell will be speaking. Speaking of Jerome Powell, let me go back to Shirts for Traders, as they have a very funny Jerome Powell shirt as well. Where is that Jerome Powell shirt? The Jerome Powell shirt. Where is the Jerome Powell? Aha, here it is. Pretty much sums it up. That's right, Jerome Powell pretty much sums it up. All kind of shirts are available at Shirts for Traders. Just wanted to mention that as well. Thank you guys for allowing me to pay homage to our sponsors. And again, as I was pointing out earlier, as this started to take place, those of you who did not get in that put, if you wanted to make some money and partake in some money making opportunities, there was going to be one. And I explained why that would be. It would simply be not from calling a reversal, but from profit taking opportunity. This 512 is a base. It is a weekly area of support. A natural magnet is also a whole dollar amount. And the market goes from whole dollar amounts to half the wholes. So just from the time that I told you guys to get in this call, she's gone from 512.50 to 515.50. A $3 move. What more do you want from me? Guys, I appreciate you so much. I look forward to doing this with you next week. I am out of here for today. I will leave the chart up. God bless you. Be well. Oh yeah, I say that to say, please don't chase it now. Please don't chase it now. There was a great opportunity to get in when I called it out to you. There was also a great opportunity at the beginning of this following 5-minute candle when we had the initial pullback. Once we got back over that 515, this is now an area to start taking profits. Again, this is not calling the reversal. This is just a profit-taking move by the bears who have enjoyed so much profits. Now again, please don't chase this move. If you missed it, no problem. Just wait for another setup. But I was happy that I could call this out for those of you who missed that put and still wanted to get some money. Have a great weekend. Does anybody realize yet that's a $10 jump in 3 candles? A $10 jump in 3 candles. A $10 jump in 3 5-minute candles. This is panic selling right here. Right back to that beautiful line. Every line on this chart means something, guys. Every line on this chart.
objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy. We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Feels like quite a moment to be speaking with you, and I want to thank you for your time. He's got it. I want to thank you for being here, and thank you for taking the time to speak with this group of business journalists. Also like to give a special thanks to Heather Long with the Washington Post, who helped make this event possible. So for starters, sir, how's your week been?
Just fine, thank you.
Care to elaborate?
So far, so good.
Chair Powell, yes, thank you so much for being here and taking our questions. You were talking about the economy as being a very strong economy. You characterized inflation as coming down, employment as being very strong still. However, President Trump earlier this week, when asked about the market volatility we've been seeing, said the volatility was, quote, to be expected. This is a patient that was very sick. We inherited a terrible economy. A lot of voters did and do agree with that assessment, or at least in part. I'm wondering how you would respond to that assessment and the disconnect between the story of the data and the way a lot of people are feeling about the economy.
Sure. So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments, so I don't want to be seen to be doing that. It's just not appropriate for me. But the situation, I think, is this, and people, when they're surveyed, they are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23, largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy has been growing, but people are still experiencing that high price level. In other words, prices don't go down. They know they're paying much more for the basic necessities of life, and they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. Of course, we're looking at inflation, which is the change in prices, and we're seeing that has come down quite a bit, and that unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy's growing. So all those statistics are good, but the price increases of the past few years are weighing on people's budgets.
So I'm from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Chairman, they're troubled and they're nervous. One business owner told me, if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12th, they took the data in. It still shows us a solid economy. Unemployment's still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do, and many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so there's not much more I can say about that. I realize that the uncertainty is high, and what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
At a congressional hearing last year, one of the U.S. representatives said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact, I feel like it's one of the roles of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we can experience with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis. It's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are, in fact, the values that we try to live by. We're driven by, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. And I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader political discussion about the wisdom of policies that are not assigned to us. We're not responsible for trade policy, immigration policy, fiscal policy. So we don't comment on those. Decisions are made by others, and what we do is we use our tools to try to achieve the goals that Congress assigned us, which is maximum employment and price stability. So I like to think that over time we're a source of calm, rational analysis and also of stability. That's really what the business that we're in is, providing financial and macroeconomic stability to the public. That's really our purpose.
So how can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person? And do you see yourself as the consoler-in-chief on economic matters?
No, I think, take a step back. What's happening is, as I mentioned, the new administration is making significant policy changes in trade, immigration, fiscal policy, and regulation. And you're still just a couple of months into the administration, and that process will take place, and at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifest and clear. So I think I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and it is just kind of a manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and you as chair are very projection, data-driven, policy-driven, how do you handle a moment like now? I mean, can you tweak your plans and projections? Do you just do you have to reset them?
So, what we've had since in the last few months is, from the staff, has been a placeholder. Rather, they wouldn't call it a forecast because it's so uncertain. They call it a placeholder. And that's kind of how we've been thinking about it. So it's a good time to take a step back and let things clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say, so it's not really tight policy, but it's which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments.
Business owners in Wisconsin have told me that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say, we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. Sounds like they're in the same position as you are a little bit.
No, we hear the same thing. Of course, we have an incredible network of contacts with businesses and also universities, nonprofits, all different sectors, through the Reserve Banks and also through the Board of Governors. And that's what we hear. But again, it's a process. We're going through it, and I think we will know when we know what the policies are exactly and what their implications will be for the economy. That will all become clear, and I think that'll be a time when people can make decisions. In the meantime, though, I get it. We're hearing that a lot from people, and we are kind of in the same place, which is waiting for clarity about what our policy path should be.
It might be months away.
We'll have to see.
Yeah.
As you're talking about placeholders right now and having something in the place when there's so much that we don't know, it does occur to me that this is not the first economic shock that you have steered the markets and the economy through. Obviously, there was COVID almost exactly 5 years ago. It seems similar in certain ways with a lot of uncertainty, a lot of shock, also potential disruptions to prices and to supply, which is very much in the Federal Reserve's wheelhouse. I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they to prices and to supply, which is very much in the Federal Reserve's wheelhouse? I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they totally different, somewhat related?
I think each situation is different. There was COVID. There was also then, in the response to COVID, then there was high inflation, and then there was soft landing, and now we have new administration and changes in policies. And every situation, it kind of rhymes, but it's not exactly the same thing. And so in this situation, what we face is what I mentioned in my remarks is you actually have risks for higher unemployment and higher inflation, and that's difficult for a central bank because our tools, which consist of interest rates, either slow down or speed up the economy over time. And higher unemployment would call for speeding up the economy, and higher inflation would call for slowing it down. So you can be in a situation, if we find ourselves in that situation, we look at how far each of the two variables is from its goal, and we ask ourselves, how long would it take to get back? And we weigh those things and make a decision about what to do. But there's no question that's a different situation, very difficult situation. When we faced high inflation, it was painful for the country, painful for the people that we serve, but we knew what policy needed to be. We knew we needed to raise rates quite a bit. During the pandemic, we knew what we needed to do. It was very clear the direction that we needed to take with force, and we did.
It's almost a situation potentially where the dual mandate is at odds with itself.
The two goals are, as we say, in tension, or they may be. I'd say that's not what we're seeing right now, but it's the effects at the margin right now would be for higher inflation and perhaps higher unemployment, but that's a marginal effect. I would say you're not in a situation like we were in the 1970s where the two goals were really both pulling in opposite directions and required. It's just very hard for a central bank to be the answer to a situation like that. But that's not the situation we're really in today.
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? Which lever do you, what do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the sixth paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically this doesn't happen very often, but if one of them is further away, then you would focus on that one. In the case of high inflation, they actually both pointed in the same direction. The labor market was overheated and inflation was very high. So both of those called for tight monetary policy. This could be different, but again, we're not actually facing that today.
I feel like there's another tension inherent in your job, which is that you're looking at the macro economy, at the global economy, really, and the U.S. places in it, but also the data you're looking at is very profoundly human, as Jim has been pointing out. Jobs, I think, and prices are probably the two most human pieces of data, and certainly in our day-to-day experience, probably the things that loom the largest. How do you reconcile those two things when you're looking at the data, like both the global markets and knowing that the data represents a lot of lives and jobs and egg prices and things like that?
So I think at the Fed, we always keep a focus on the people that we serve, and we know and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And I think if you talk to people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic events are just very, very unpredictable at times, and there are shocks that you can't see coming. But nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment. And that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to do.
So in response to the last round of tariffs, Harley-Davidson, which is based in Milwaukee, moved some production to Thailand. Now the company might be whipsawed again by the new tariffs. It could be really devastating for sales, for employment, for the future of that company. But a lot of companies are in that same position. And what do you say to companies like Harley-Davidson and their workers?
So it just isn't, I really want to stick to our knitting. I mean, we have this great thing called our independence of monetary policy, and that's critical for us to be able to do our job. But for us to keep that independence, we need to not succumb to the temptation to want to be a player on issues that are not assigned to us. And trade policy is one of those. There are many, many issues that people love to try to pull us in on, almost every issue, really. And we just need to stick to our knitting, not get pulled into those things. And so trade policy is a classic one. Energy policy is another. Climate change, immigration is not real. Although all of those things have economic implications, and it gets argued that way. But if we treated those as our job, the case for our independence would disappear. So I really can't comment on. I mean, we hear the same stories like that. But honestly, the policymakers who are charged with that, they're probably hearing the same stories too, and they're reaching a judgment about what's in the best interest of the country in the long run. That's what they are doing, I guess, and that's so it's not for us to comment on that.
What happens inside the Fed at a moment like right now, when there's so much change and quite a bit of uncertainty? When you're watching things unfold, what does that look like, practically speaking? What are people doing inside the building?
So I'm very proud to work with the people I work with. I can tell you that in times like this, or times like the pandemic, where the global financial markets were shutting down, the global economy was shutting down, people step forward and they say, "We've got this." These are career people who were here for the global financial crisis. They've got 25 years, 35 years of experience with crises, and they step forward and it's just incredible what they can do and how good they are. It's a great honor to work with them. So right now isn't that situation. We have the situation we have. So our trade people and our inflation people and our macroeconomists are all working hard to kind of digest the news of this week and try to filter that into the forecast that they'll make. And policymakers are doing very much the same thing, and we're reading everything we can about what's happening and lots of outside analysis too. We don't have an FOMC meeting until May 6 and 7, so that's really a process that lasts several weeks. But and we're not quite at that stage yet. But we're kind of thinking ahead to that and working through all of that. I will say though, it feels like we don't need to be in a hurry. It feels like we have time to. Yes. It feels like we don't. No, I mean it's like I said. You have inflation is going to be moving up and growth is going to be slowing, but it isn't really. To me, it's not clear at this time what the appropriate path for monetary policy will be, and we're going to need to wait and see how this plays out before we can start to make those adjustments.
Question from the audience. One of our SABU members is: are you in contact with other central bankers in other countries at a time like this?
Yes, pretty frequently. Absolutely, I am. And the same was true during the other crises I've been through. Not only that, though, we do meet very regularly. The IMF World Bank meetings here in Washington twice a year. We go to Basel multiple times a year to meet. That's all central bankers. And there are also G20 meetings, G7 meetings where the central bankers are there. So we're kind of regularly meeting and talking. And when we're not doing that, we're also texting each other.
Is there a group chat?
I'm not at liberty to say. No, there's not.
And have you talked to those central bankers this week?
Recently, yeah. I didn't want to get too specific about this, but yes, I have.
What's their sentiment? Can you characterize that?
I'd rather, again, I don't comment on what my international colleagues say, or it's not appropriate. But we're talking about events. We're talking about the implications for the economy. We're discussing what we're hearing from markets and from business people and for from the elected governments too. It's all the things you would expect us to be talking about on a regular basis. It's one of the best things about this role is that the central banks have a lot. We're all non-political, so we think about things in quite similar ways, and they're real bonds. We're not lobbying each other ever on policy. That's just not a thing, because we do our policy here, they do their policy there, but we develop really really good relationships and bonds with them. And it's one of the real pleasures and benefits. Being able to talk about this, just not only with the great people at the Fed, but also with the leaders around the world.
I mean, it's interesting because it is a job of enormous responsibility and power, but it's also a job. How would you characterize the job of Fed chair? Like, how is it as a job?
Honestly, that's what it is. I really feel just like another person doing that job.
Really?
Yeah.
You just like...
That's how it is. I'm doing a job. I have a job to do. I actually really like the job. I like it a lot. I enjoy it. It can be stressful at times, nonetheless incredibly interesting, great people to work with, really important. What more could you want? But that's what it is. And, I'm blessed by working with great colleagues who are really committed to getting it right. I mean, fully appreciate how important it is that we get it right and do everything we possibly can to bring the best thinking, the best analysis, and debate things, over and over until we feel like we're in the right place. At the same time, there is no certainty in this. You can be wrong because the economy can zig when you thought it was going to zag.
So your term as Fed chair ends about a year from now. What do you think about your job security?
I fully intend to serve all of my term.
Excellent. I mean, as we're getting close to wrapping up, I did want to ask something a little bit out of the box. I think because you do have a position of such great responsibility, people are very curious about you, and I think people tend to read into everything a Fed chair does, small gestures, word choice. I know it's part of our jobs in this room to pore over every word you choose. I did want to ask about one thing that I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that?
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say, so then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties. And then it becomes a thing, and now I definitely wear purple ties all the time.
Okay.
But I felt like, it just felt a little awkward to be wearing one that was identified. We are strictly non-political. I can't stress that enough. We are not. It's not that we're bipartisan. We are non-political. We don't do that. And so purple was a good color for that. That's all. Plus, I like purple ties.
Sorry, I didn't give you a purple guitar pick. I have one other Milwaukee question that I overlooked here. But in Milwaukee and other parts of the country, the housing market is out of whack. In our market alone, in southeastern Wisconsin, there's 5,000. The market's out of whack by like 5,000 houses that need to be on the market for it to have equilibrium. And a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. And before they move on, before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID, and people are kind of locked in. It would be very expensive to move, and that'll of course wear off over time. You also mentioned, the costs of materials that might be imported, lumber and nails and things like that. And yeah, and also labor, a lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the materials side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
You mentioned that we're kind of in a period of waiting right now to see how policy ripples out through the economy. How long do you expect that to take? How long do you expect these big policy changes to show up in our day-to-day lives, in prices and supplies and things like that?
I mean, for a while we didn't know what was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much you know now at this point. And you'll know more as you start to see the effects on the economy. So as the months go by, it's hard to say exactly when you'll know. But clearly that learning process is ongoing. we're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be important fiscal legislation coming up fairly soon, and there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date.
Is the fiscal legislation the tax cuts?
Well, yes. I mean, I know they're contemplating, and again, we don't comment on fiscal policy, but what I read is that they're contemplating, making the Tax Cuts and Jobs Act cuts permanent, and also perhaps some other things as well. We wouldn't be. We have a sort of a placeholder for that too, but that's really not ours to comment on. But that's what I was talking about. Yes.
So I have a question from a friend in Milwaukee who said she has clients that have deals ready to go, businesses that are ready to launch from their garage to a private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity deals?
So again, we're hearing a lot of that. People are just kind of waiting for clarity. So, and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll be able to see with real clarity what the policies are and what their effects are. So, you're right. We hear the same thing from businesses and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us, and that just seems like the right thing to do at a time of elevated uncertainty.
What economic indicators are you watching right now? I mean, very famously, you look at the CPE and obviously the CPI and things like that, but are there any economic indicators in this moment, in these circumstances, that you are watching, focused on,
Sure.
interested in?
So the basic two big data pools are the data around prices and around employment. And we get, in the employment area, we get just really, that's an area where we actually get pretty good data, although the survey response rates have been lower. Nonetheless, we get a lot of different data, and it's not just unemployment, it's participation, it's by age group and things like that. It's wages, it's many, many different things. It's jobs, it's quits, all the job creation, quits, openings, all those things. So that's one thing. On inflation, we target PCE, personal consumption expenditure inflation, not CPI, and the two are broadly they move they move together. But 25 years ago, the Fed switched to PCE. The public looks at CPI. It's kind of a little bit of a thing, but because we think it's really just a better way to capture the inflation, the cost pressures that households and businesses feel. We think it's a better measure, and that's what we look at. But they're not that different. I mean, they look at different measures. Ultimately, they're pretty close together. Those things. On growth, you look at what's happening with consumer spending. The economy is overwhelmingly driven by consumer spending. So you look at how are consumer surveys, how are they feeling, how are they spending? Sometimes the surveys are very negative, but they keep spending. That's been happening really for a while. People spent right through the pandemic, and they spent right through this time of higher inflation. They kept spending, and forecasters kept thinking, like us, that consumption would slow down. But that's a really critical thing. After that, business investment is a big chunk, and you look at that, and that is also susceptible to sentiment. Businesses, if they don't know what to do, they're not going to do an acquisition. They're going to hold off on building a factory or a plant or hiring people, things like that. So we look at, I could go on for a long time. We look at a lot of data, and we try to make sense. We also talk to people who are in the real economy. I grew my career was mostly in the private sector, talking to people who ran businesses. And for me, the story doesn't come together until I actually hear from people who are in the economy doing things and what they're feeling and seeing, and then it sort of fits together better.
Is this like via the Beige Book or?
The Beige Book. Thank you for mentioning the Beige Book, and I hope you read it.
I love the Beige Book.
See, that's great. Everyone should read the Beige Book. The Beige Book comes out sort of mid-FOMC cycle, and it's all the 12 reserve banks and all of their incredible context, what they're saying about what's going on in the economy. So if you want to know, you can look at the national data, but if you want to know what's going on in regions and at different industries, you look at the Beige Book. So it's really a critical thing. And actually, the reserve bank system that we have is an enormous strength of the Federal Reserve System. We have these 12 reserve banks with their own, economics departments and own participants on the FOMC. So that's a great thing to look at.
I'd like to ask you about another body of work that many of us know that you're familiar with, and that's the Grateful Dead. So, question for you, sir. American Beauty or Terrapin Station?
American Beauty.
That was not even a
Not
pause.
even close.
That was
Ask me a
so
hard one.
fast.
Working
No,
Man's
that's my era.
Working Man's Dead
Yes.
or Europe 72?
Oh, both. Yeah,
come
that's
on.
we're in the same era here. So that's, for me, it's late 60s to mid 70s. So
Touch of Grey, what do you think?
It was their only hit, but it's a good song.
Okay.
Yeah.
Finally,
Are we going to do this?
I feel like you're speaking another language.
there's a well-known Grateful Dead bootlegger who, with I believe the permission of the band, Dick's Picks, who's put out. So, what's your recommendation of those hundreds of?
I don't have any Dick's Picks. Like I said, my real interest was late 60s to mid 70s.
Yeah.
And I saw them a bunch of times, and I know every note on every song from that era. But since then, I've been busy, actually.
Well, we thank you for taking time out of your schedule to join us here, and we appreciate your work.
Thank you very much. Thanks, everybody. Thanks, Jim.
Thank you.
We are now adjourned until 2 o'clock, I believe.